Welcome to your channel, Dr. Gazavi. Economics and financial issues are very important. Let's go.
RTS, Expert Advisor for Reaction Trend System. 1. Introduction. Throughout the technical analysis, T.A. perspective, there are many price levels of an asset that investors commonly take into account, especially the famous pivot points. The two higher points are price resistance points, while the two lower points are price support points. In the late 1970s, Wilder proposed a strategy based on the empirical observation that, most of the time, price traded oscillating between these inside points, and when the price went up, down beyond such extreme resistance, support, the underlying asset started trending. It is not by chance that these points have been considered key measures and crucial direction signals for many market participants. Although TA has been discussed with suspicion by academics in the past, we can find plenty of studies surging in recent years, but the debate is still open. Yet, two of the greatest challenges in this context arise from the market timing for starting and closing positions, and risk discipline. The first issue is intrinsically related to the pivot points, and the second one has been associated with volatility measurement. Based on that, we tested this simple strategy of buying support and selling resistance combined with closing and reversing position if price achieves a second support, resistance. According to the original strategy, presented poor performance, which can be confirmed with our model. See details ahead. Thus, the idea is to apply the Garch volatility model to update these four action points in order to improve the dynamic estimation of them, and proposed this trading model which shows better risk-adjusted returns than prior studies in many situations. The reaction trend system, RTS, trading strategy proposed in is divided into two modes of operations. The first is called reaction mode, which is intended to be used in periods when the market is not trending. The second is called trend mode, which, as the name itself claims, is adjusted for scenarios in which the asset is either in an uptrend or downtrend. Such strategy is defined based on four fundamental points that are calculated daily, called action points. These points define the entries and exits of the negotiations, as well as the alternation between reaction mode and trend mode. Statistical models and machine learning are widely used for trading with a certain success. Pure statistical models for trading are usually specific for some market conditions, such as pairs trading, arbitrage, and selection of models for the industry. Most models are based on pattern recognition based on past learning, and the performance may be poor during human extreme events such as world pandemics, wars, and market crashes. The advantage of our model is the capability of trading in any market conditions because it reacts immediately with market movements by reversing position and following the market. The proposed software forecasts the action points through our code, and one expert advisor, also known as automated trading system, can be used as a means to backtest, which allows to check the efficiency of the trading model in a certain period in the past. Moreover, it can also be operated in a demo account in the MetaTrader 5 (MT5) platform to perform a more sophisticated forward test combined with the R code. Instead of writing a software code fully in R, the strategy was evaluated in MQL5 language. This choice permits to make a discussion over the outlines captured from the Mount 5 platform, which has a well-known environment for backtesting the trading model and offers the possibility to perform a forward live trading in a simulated scenario nearly equal to real financial market. Under the statistical theory of volatility modeling through Garch models, we propose a trading strategy that modifies the calculation of action points. Hereafter, we refer to this approach as RTS Garch. The results and reproducible codes are available in a capsule at CodeOcean. the R code and the RTS Expert Advisor. The MetaTrader 5 platform allows trading strategies to be automated and tested using the proprietary programming language called MQL5. Such implementations within the platform are known as expert advisors. The original RTS strategies and the RTS Garch were both implemented in the same expert advisor, simply called RTS. In the case of the RTS Garch strategy, the expert advisor depends on the estimation of parameters that are obtained in an a priori step using the R software, 11, together with the library-based DCC Garch, 12. Fig. 1 illustrates this process through a flowchart, in which at first the bivariate data formed by the daily history of the maximum and minimum variations are considered, then the volatility of such dataset is handled by a Bayesian DCC Garch model, thus generating the parameter estimates that will be the inputs to the expert advisor. From the practical point of view, the first step, illustrated in Fig. 2, is to edit lines 23, 24 and 25 of the document Garch_estimation, RMD, in which you must choose the code of the asset of interest according to what is available in the data provider, Yahoo Finance, the start date and the end date for which the model will be adjusted. Thus, when compiling the work with R Markdown, a document in PDF format will be generated, which at the end of the last page will present the Garch estimates, illustrated in the left panel of Fig. 3. Such values must then be copied to the respective expert advisor arguments, illustrated in the right pane of Fig. 3. Fig. 3. Left panel, R Markdown output of Garch estimatives, right panel, RTS input for Garch parameters. Below we list the other arguments available in the RTS Expert Advisor, along with the descriptions of functionality. Magic number, numeric code that links the execution of the Expert Advisor to the applied asset. Market open time, start time for which new trading orders can be received. Market end time for which new trading orders can be received. Market close time for which the algorithm should close open orders, important for reaction mode. Open orders in reaction mode. Boolean variable that signals the expert advisor's permission to initiate trades when operating in reaction mode. Use BOS. Boolean variable that signals the inclusion of a sequence of days of operations for the types buy, out, and sell, according to the phasing technique described on page 75 of Wilder's book, 2.1. Update stop on reaction mode. Boolean variable that signals the expert advisor's permission to update the stop loss of open orders when operating in reaction mode. Update stop to worse. Boolean variable that signals the expert advisor's permission to lower the stop loss of open orders when operating in reaction mode. Update TP on reaction mode. Boolean variable that signals the expert advisor's permission to update the take profit of open orders when operating in reaction mode. Fig. 4 illustrates these variables together with the expert advisor and the default values. The development of new trading strategies, as well as their automation, is a topic that has been gaining strength in the scientific literature. In fact, there are several advantages in the adoption of these systems by traders, mainly in the exact reproduction of the algorithm of interest and in the high speed in the interpretation of signals and the execution of orders. In this sense, this implementation of the RTS in MQL5 will help interested academics, traders and practitioners in many ways. They can directly reproduce the results for the set of assets presented in 5, using the MetaTrader 5 platform. Moreover, they can test and use R code in combination with the expert advisor in other markets and assets. The model predicts future volatility by using only the history of observed returns for the asset. No other variables or relevant facts are taken into account by this methodology. On the one hand, this is a typical characteristic of technical analysis. On the other hand, it may be possible to improve the trading model performance if some filter, derived from other data, is used in a confirmatory step for opening or reversing positions. Future developments to improve gauge volatility estimates may include analysis of sentiment indicators and social media trends. In addition, this automated trading system could be expanded to other platforms by writing in other languages given the opportunity of application for any investor. Declaration of competing interest. The authors declare that they have no known competing financial interests or personal relationships that could have appeared to influence the work reported in this paper. Abstract. An empirical strategy, proposed by Wilder, 1978, operates in any market conditions based on 4 action points calculated from historical prices. Here, we developed an upgraded system by improving the calculus of these points through a statistical volatility model. To sum up, gauge quantiles replace the fixed values in these points and the operational logic remains as the original methodology for initiating and closing positions. The aim of this paper is to show how to use the implemented R code that estimates these action points in combination with the RTS Expert Advisor.
Thank you for watching, and please subscribe to our channel. Economic and financial issues are very important. See you in the next video.